Hey everybody, Brian Shannon here from alphatrends.net. It is Wednesday, the 2nd of October, and the markets are kind of stalled out here. Let's take a look. We've got the SPY, the Qs, the semis, and the biotechs. All of these markets you can see are below that orange 5-day moving average, which is declining, which means we're on caution. We're also below the high from the year-to-date, an all-time high in the S&P, and the NASDAQ is the just the recent high, not the year high. But the bottom line is we're just a little bit cautious intermediate term. Longer term, on the daily time frame, you've got to look at this market and say we're still holding above this prior band of resistance, and that is holding a support as that rising 20-day moving average comes up to test it. As long as we're above that little support in here, let's just call it 564, then I wouldn't be expecting a bigger breakdown. We're just kind of stalled out here in the S&P 500 as we're below the declining 5-day moving average. So to me, it says I don't want to get long aggressively because maybe we see a shakeout. That would be the best thing, is to maybe see a quick shakeout like this and then recover. That would get all of the people who have their stops under here kind of shaken out, bring some short sellers in, and that would go to strengthen the market. So far, the anchor off of this late September low, second week or so of September, that's where we're finding the buyers along that anchor, and the same is true for the NASDAQ along that anchor as well, which we've been talking about. Now, for the NASDAQ on the daily chart, we broke below this prior band of resistance, and so far we're stuck below it. So a little less confidence that we're going to recover quickly in this market at 484 basically is where that is. But more important is we're below the declining 5-day moving average. This is where we were 5 days ago. So that means tomorrow we average this data out, and even if the market rallies up to here, that 5-day moving average is going to decline. So just some caution overall. We're in primary markets overall. If you like this type of analysis that I do, well, I do it now every single day for $10 a month on Twitter. You have to be on Twitter. That's just the way it is. That's where the service is offered. Call it X, call it Twitter, whatever you want. Go over there at Alpha Trends, and you can see I did this little article here to tell you what's included in it. Daily analysis of these markets. Sometimes I'll put stock ideas out there, crypto ideas. If you're interested in that, I will update on a regular basis, more regular than I do here, and a monthly educational webinar. So here's, go take a look at it. Alpha Trends, x.com/Alpha Trends. It's $10 a month, less than a cup of coffee a day, or whatever they say. The Russell 2000 is in a little worse shape intermediate term because it broke below the anchor from that September low, and we're stuck below it. Well, we're also below the declining 5-day moving average. If you recall, a couple days ago, I was getting ready to buy this market. I didn't want to buy it here because it was extended, and then we had these lower highs. I was looking to buy if it made a higher high above the flat to rising 5-day moving average. It didn't do that, so there was no reason to be a buyer. It doesn't help to be early. In fact, it hurt you because now you're down in this position, and just to get back to neutral in the intermediate term, we're going to have to get back above this level right here. Keep grabbing the wrong tool. I mean to grab this. So 218, 219 just to become neutral. Otherwise, this market can fall apart. I don't think it's going to do that because we're right on the 20 and the 50-day moving average, but we have to be cautious. We can't buy just because we think this level is going to hold. We have to wait for evidence on the shorter term time frame. Everything I talk about is a swing trade perspective. Semiconductors, they're pulling back the way we wanted them to. They're coming down in towards that 20 and 50-day moving average, but they're below declining 5-day moving average, so we're not ready to buy there. I've been tracking NVIDIA here a little bit more aggressively recently. It's right on the 20 and the 50-day moving average. It's right on the anchor from the handoff from the year-to-date low, and that was, of course, from the beginning of the year-to-date, not the year-to-date low. But that was also the August 5th low. So we're holding right on that. So it looks like it should hold in here, as we've been mentioning. We've got this shoulder, this head, and this shoulder, and then we've got this neckline that looks like this. So It looks like it's setting up to be bullish. If you think this level is going to hold, go ahead and get involved. I'm waiting for a little bit more time. That 5-day moving average declines tomorrow and maybe on Friday. Maybe it does this, rallies up, pulls back, that flattens out, and then it's good to get going. That's how I'm looking at the semiconductors. Biotechs, there's still been no reason to buy. If you recall, I've been updating this. I bought it over here, sold a third, and sold the final third here, and then I've been in cash ever since then. This is what I had sketched in last Tuesday, and look at how it's been following along this basically map that I drew out for it. Now, I never expect those those drawings to be the exact way that a market will travel, but I look at it and say what's most likely. So maybe we get a move up in the biotechs like this tomorrow. I wouldn't get totally excited. I would think maybe it's going to do this. We're right on the trend line from the May low. We're still holding that above the 200 in the year-to-date anchor, but we're below the 20 and the 50. This market has to make a stand in here if it's going to be able to get up off its ass and do something more meaningful. Financial stocks, I don't see anything exciting going on there. The big turnaround this week was in the energy names. They did break that downtrend line. There's still a mess, I think. I don't trade energy names, so I don't really, missing a move like this doesn't bother me at all. It's just not something that's really part of what I do because because they trade on what? They trade on bombs going off. I want to trade on something a little bit more predictable, less volatile than bombs going off. Bitcoin, it's done what we want it to do so far. This is what I've been drawing in for the last several weeks, these lower highs and lower lows. I sketched in that I was looking for a pullback, and then maybe we could create a higher low and then a higher high that was a little bit tighter in here. So now we want to see it hold in this area. You can see I've got all these anchors that are kind of coming together in here from this low, and this low, from this high, and this high, all in this 60,000 area. I bought a little bit yesterday. We are below a declining 5-day moving average on Bitcoin. This is the only market I buy on weakness. The 5-day moving average doesn't bother me as not much. If we're below it, it's a nibble. It's only a small purchase. What I'm really looking for to happen in Bitcoin is something more along the lines of, let's see, let me get that pencil out. And maybe it can do something like this. Maybe it breaks down a little bit further, does this, and then in a week or two, it starts going as it gets above that 5-day moving average. So those are the types of things that I'm looking for. I will be updating this every day for Twitter subscribers for $10 a month.